morning, everybody, and good afternoon. My name is David Appel, head of the SaaS vertical here at Sage Intacct. Alex and team have done a great job on how the sessions are going to build on top of one another. So I'm the next session. Radka, would you show my screen? Thank you so much for doing that. Jeff was one of our board members, and so just picture getting that type of insight all the time and how to understand the customer and build it in the product map. So I've got 20 minutes, and I want to jump into what is we hope all of you learned today, which is it's just about two things. Everything Jeff just said, finance is a support to sales and product, but the value we bring is how do we bring a frictionless billing experience? People want an Amazon-esque experience. How do you do it? And the thing that Dosjan said, how do you get the reporting to guide decisions and investors? There's a lot of chatter in the comments that came up on that. I hope I answer some of your questions. For some background on me, I had a wonderful career, worked at Oracle for a long time, IBM, NetSuite, ran NetSuite software vertical, Bill.com, and then have run Intacct vertical. And so this is based upon being part of over 5,000 buying engagements with clients over time. So none of this is David or Sage Intacct opinion. This is the voice of your peers that have come in and all the hard-learned lessons. So I want to make this really operational for you. Break this into steps. We'll send out the deck afterwards. I'm happy anybody wants to chat. These are the things we want to learn. One thing I asked, though, is in the comments, would people tell me what stage are you and what billing model are you? Let's oversimplify it, like a high ACV, sales-assisted B2B, and just call that B2B, or a product-led growth with a lot of iterative volume in that. I'll bring up the comments so I can see as that chatter comes in. So there's these 5 things. How do you create both? What do you need by stages of growth? It's going to build on some things Dosjan said. How do you build your own checklist? What's the reporting you need to create somewhat by stage? And then what are the components that are in the stack? So there's some core elements that you want to build on top of. These are the principles, if you will, to think about, building on Jeff's 4 principles that he laid out there. It's realize you just need to be able to react. Because if you're in that early stage, a lot of you are Series A, Series B, it's all competitive battles right now with everybody. So how do you get new products out? And then start with the core. You need accounting in place before you get fancy. We're going to get deeper into that. And then align your use case to the market. One of the points Jeff was making is people still manage exceptions. I'm sure all of you have probably experienced this. Sales is trying to close a deal. The procurement team wraps them in a pretzel on what the deal terms are. They throw it up in the fence and you got to catch it. And like, okay, sorry, it's finance, but the Rev Rec's going to get blown up, everything, because of the exceptions you got to manage. How do you get proactive on that? What your use case is. Then how do you avoid monetization debt, which means there's technical debt and product in your DevOps process. There's monetization debt and having off-balance contracts that have a lot of exceptions to them coming in. So these are the 4 principles you want to manage against. And I'm going to go a little fast on this one because it builds on some of the things Dosjan said, which is starting at the bottom, work your way up. We're going to focus on the 4th column, financial processes. But when you first start, you're trying to do product market fit and manage, your CEO just throws receipts in the shoebox, like the person who said they got 30 people and no finance person. But then you want to prove you can sell it. Keep the growth rate up, and then you start to automate how cash flow is coming in. You automate billing, you automate accounts payable and AR, tracking unit economics. Then you're in Series B, which is prove that you can upsell and renew those customers, which puts an even heavier load on you, the finance leader, because all of a sudden there's more exceptions you have to manage. You got to track renewals and upsells and downsells. Tie all that back to ASC 606 or IFRS 15, which is telling you what are the performance obligations. You have to track the performance obligations you originally had. Doing all that is you're trying to forecast all that change, and the volume's picking up. Whether you are the high ACV or the low ACV, you've either got more complex MEA allocations on revenue or higher change rate to the contracts. And it's all that's happening. You're trying to cut the close. Next phase, you've broken a lot of glass, but you've got an exit trajectory and getting big. You want to make things predictable, profitable, and repeatable. As Jeff was saying, there's always 5% of headcounts there. The problem just changes as you evolve, and you're tracking budget versus actuals earlier on, but you get a lot heavier FP&A here, and then you get even bigger and go global. So if you weren't already aware of this roadmap, realize this is the backdrop that you're going against, that you're trying to manage against. So that's our first point I wanted to make. So here's your checklist. Build your GL. Get your dimensions in place. Set up the chart of accounts, realizing, by the way, that you only know what you know today. It's likely to change, but so give yourself a little flexibility. Buy a good GL that will be flexible with you. Know your billing use case. We're coming up on that. What's your RevRec scenarios you have to deal with? Anticipating what change is going to come across. A great board member like Jeff or audit committee chairperson or somebody like that can help you think a little further down the line, because you're running so hard trying to put out the fires today, but you want to be mindful and begin with the end in mind. Know where your data is coming from, because all this is about that second point, reporting, how to anticipate exceptions in the selling process. Like Jeff said, mind your business, mind your flow, but realize if you can do it in partnership with your CRO and CMO on what that buyer's journey looks like, you're going to make everything better, because the more you can get reporting packages out, the faster they're going to have data to do it. So they're in it, of course, the compliance to put on it. So as you think about your checklist, go through it on these steps as you go through the maturity against the maturity of the business that you're doing. And I try to put the billing use cases on one slide. It's impossible. There are so many billing use cases. If anybody wants to put in the comments here on the side what your billing use case is, I'd love to see it, where there's any exceptions that you're trying to have to put together. But we could spend in fact, I'm happy. I've got a whole another session and another time we could do on this, how to design your billing use case, put the pieces in. But suffice to say, there's so much variety here, because you're trying to differentiate with product, but then also the customer experience. The thing to think about is how you make it frictionless is being mindful about all this. We're going to build into what's the tech stack to put into it, but it's all about people, process, and technology. This is the process aspect about this session. And one plug, a great colleague of mine, Ben Murray who's the SaaSCFO.com, is doing a session a little bit later, which even builds upon mine. Ben and I often present a lot together. Fantastic leader, really understands the market. So, how you apply it, RevRec. Somebody asked in the questions, it might have been Rachel, about 606 and how you think about 606. This is complicated. There's a reason why audit is $1 billion plus business. I'm trying to put it in, but here's the 5 steps to think about as you're trying to do it all. What is the contract that you're trying to do, and what are the separate performance obligations that are in there? What's the time period that they're going to have? And determine the transaction price, allocate it based upon when you're delivering it, and then recognize it when the performance obligation is satisfied. This is always relatively straightforward when you're Series A with a low volume. Whether you're the high ACV and you got the upsell, or the upsell and the change in the product-led growth model. So this gets really complicated really fast with volume and the constant changing of it. And so the discussion I often have, because I'm often executive sponsor on projects or on implementations, and when I sit down with the CFO and we talk between the two of us, it's what truly is the performance obligation that you're trying to do, and realize they can be explicitly stated in the contract, but sometimes something that's implicit in your business processes. And so you really want to dial in what promises are coming in, because as we all know, the deferred revenue and deferred revenue waterfall has such a big impact to future rounds of valuation. That's what the incentive is, everybody. Oh, finance, this finance problem, you figured out, tell me, time out. No. What our deferred revenue waterfall directly impacts the value of our stock going on. So you do care about this, because you're sharing the risk with me and doing all this. But it's a great forcing function to be the leader in driving all this as it comes together. So there's several key reports that you want to put in. There's a myriad of all these that you go into, and they're both looking backwards and looking forwards. But billings, of course, bookings, which as we all know, are two very, very different things. Your board can help guide you into that. I've got a slide in a couple on how this point comes together. But you're trying to track both of them. What's the profit? Your SaaS P&L by the dimensions, which is why we got our first point we made on set up your chart of accounts the right way, because everybody's seeing budget versus actuals. Even if it changes because you got market demands, it's that old adage, you're not going to get there unless you know where you're trying to go. And often the path, all of us in our lives, is like this as it goes, but at least is the point that's going in there. Churn and retention. And in a couple slides, I'm going to talk about all the different ways you can calculate this. But it's critical to know this is for those of you who are first time in this, you got to keep your customers. And it's a main thing that investors want. And we've got a lot of great customer success stories where they improved what the churn rate looked like and had a material amount of post-money valuation change that they had in that. And of course, those of you who are at a high ACV with the complicated model, you know what your PS and utilization, because that's often a drag on earnings, particularly early on, is trying to figure out product market fit. Customers don't know exactly how they're going to deploy things, and of course, headcount. And all this is myriad is the more you can understand what's happening with cash flow, the more you can pour it in to put it all in. So here's just a sample dashboard, but my gosh, is when our customers deploy this and share this with the executive team, it's like I'm in California at 7 a.m. The sun's breaking over the horizon right now. It's like that sunshine just comes in on everybody because I can understand what's happening and the implications of a trigger. And this is when, again, finance turns from a back office enablement function into a business transformation function, which is what you're ultimately trying to put in place and have happen. So I want to double click several times just into churn because I want to pull something out. We work a lot with the investment banks because a lot of our customers go public. We have 23 IPOs already this year. And so this is all the churn metrics from a set of IPOs, enterprise software IPOs, SaaS, enterprise SaaS IPOs that have come on. Look at all the different numbers. But take a look at how everybody calculates it. Look at that. It's not GAAP, I'll tell you what. I always love pulling out the box example in the top right-hand corner. When you read the fine print about what implied ACV was, this was at the IPO, it was customers that paid over $5,000 a year in ACV in order to really figure out where the churn metrics was. What this means is you can design a little bit. You can realize there's some flexibility to what the board wants and play it out. But it also back to how you're trying to set up your billing use case and understand your scenario. Be thoughtful about this. Plan this from the beginning. So all this is the infrastructure for the backdrop on what your tech stack is, because it's kind of fun to buy stuff, but it's more better to put it all together. And most everybody buys it in pieces. But the problem when you do that, and several of you might be living with that, is, gosh, it just means there's more integrations. The more integrations means there's more time for you being spent manual, which means a delayed close, which is no fun. I often ask controllers, what's the favorite part of your job? And I moved from being 80% manual to 80% strategic. And I found patterns in our data and cash flow that I told the executive team about that made material impact to the business decisions they made. That's a real point of pride, because when you got the data all over the place, what's the right data? And staff meetings turn into pounding the table on whose data is right, which doesn't build trust, which impacts shared consciousness to really effectively make it happen in your market. So here's the way to think about it. All that buildup is to this. Start in the upper, at the top with how your order's coming in, be able to apply your billing scenario and automate your billing scenario and having come in, and all the portions on cash flow. And then for the diehard accountants here, everything you need to do on prepaids and amortizations on all that, pulling it all in, commissions. As Jeff pointed out, sales tax is often something that people just don't concern themselves with in the early days, but trust me, you should be concerned about it when the time comes in. Your revenue, then core accounting that comes in, but all this to build the reporting package, because when it comes out faster with the great close, the data is there for FP&A or whatever level of rigor that you have in your team to be able to put these in. So, and again, we'll send out the deck and share all this. And the way we think about it now, if the old way of terms to use was quote to cash, one of the analysts that we work a lot with, MGI Research, Andrew Daly, he calls it prospect to disclosure. all the way from the beginning through compliance. And excuse my background noise, it's 7 a.m. here. Kids are going to school. Dog's probably going to start barking in a minute. We'll see. I'll tell her she's a good dog. And but here's the pieces to think about how the whole thing comes together. This is the pattern that has really emerged in how you apply going about doing it. So here's the points we want to make. How do you create both? What do you need by the stages of growth? What should go into your checklist? What's the beginning with the end in mind? What's the reporting that you need? And then back to this last point, what should go into the tech stack that you use in order to build things up? Alex, I am happy to take some questions, or we can end a few minutes early. Everybody, thank you for some of the comments. If there's any questions anybody has, I'd welcome seeing them on the side.
Thanks, David. You made me laugh out loud there about the dog, telling her it's a good dog. Also, best dressed man today. Thank you for that as well. Good to see you. I don't see any questions right now, but maybe I know you were in the hop-in chat earlier, so maybe if you want to pop back into that, and if you've got the time, I'm sure some questions will come up with the engagement. But thank you so much for that talk. Good to see you. I'm looking forward to our pint together in Dublin. Counting down the days.
Two more things, since I've got another minute.
Yeah.
First off is feel free to reach out to me. I'm on LinkedIn, or I'm david.apple@sage.com. I spend a lot of time. I'm on several boards and helping companies in order to figure all this out. The second is we've worked real hard, and the reason we're doing all this is to be leaders in creating this tech stack. The firms that Jeff managed, your other sponsors like ChargeBee, Pleo, and others are core partners of ours, because all of us are trying to work together holistically and competently to help you out become successful. So feel free to reach out. It's a pleasure meeting everybody. Alex, I always love doing this with you. Can we all just thank Alex and the SaaStock team, Radka and Sophie, and everybody behind the scenes? Well done as always. Cheers, everybody.
Thanks, David.
Have a good day.